Video we're about to get into, I probably should have added this more towards the beginning of the crash course series. A lot of people are confused when it comes down to day trading, swing trading, long-term investing. So I'm going to kind of use this video to try and break that down a little more so that you can choose the style that best fits you. If you haven't already, go ahead and check out the first video of the crash course series. Finish that one, watch the second one, and then this one's going to be labeled the third one. Before we get into this video, if you like the crash course series, make sure you hit the like button, comment down below any extra questions you have, and if you haven't already, make sure you hit subscribe so you don't miss any of the future videos. Welcome to the Passion to Profit Stock Market Trading Guide. Grab a notebook, take notes, write anything down that you don't know. Any of the vocabulary words that you hear me saying, make sure you write those down too so you can Google them later. Don't be lazy, come on now. What is your trading style? The first trading style we're gonna have is a swing trader, buying a stock and holding it for longer than one day. So if you buy a stock today and sell it tomorrow, that's a swing trade. If you buy a stock today, sell it next week, that's a swing trade. If you buy a stock today and sell it next month, that is a swing trade. So the concept of a swing trade is pretty simple. Oh my goodness, there's a dog barking outside. So the concept of a swing trader is pretty simple, and this is actually the one I recommend to most beginners to get into. Now, what is a day trader, or what is a day trade? A day trade is when you buy and sell a stock in the same day. So if I buy in the morning and sell right before it closes, that's a day trade. If I buy now and then sell in 30 seconds, that's a day trade, which that would actually be a little bit more of a scalp, but it's still a form of a day trade. And don't get confused about what scalping is or a day trade. Just know that scalping is just another form of day trading. Now, I need to really stress this for a lot of beginners because they don't understand this rule. If you live in the US, you are subject to the PDT. And what is the PDT rule? What is the pattern day trader rule? The PDT rule applies if you have a margin account. The PDT rule applies if you have less than $25,000 in your account. You will only be able to place a day trade 3 times a week, so 3 times every 5 trading days. And they set that in there to really protect a lot of new traders, because a lot of new traders think you can really just come into the market and make all these trades and make all this money, but that's not really how it goes. So this rule will actually protect you and help you not blow up your account through your learning phase. And if you don't know the difference between a margin and cash account, a margin account will allow you to have those 3 day trades every 5 days, but a cash account, you will actually not be subject to that PDT rule. And if you're not sure what a margin account is or what a cash account is, make sure you watch the first video of this crash course series, because in there I explain in depth the margin account versus the cash account and which one you may want. There's not really one that's better than the other. It really just depends what type of trader you are, which one you like best, and really just the one that fits you and your trading style. But just make sure you watch that first video so you can understand what a cash account means and what a margin account means so that you can make the best decision for yourself. Now, what is a long-term investor? And this is the one I get all the time. A lot of people are confused with investing in the market and trading in the market. When you're a long-term investor, you do a lot of fundamental research. So you really want to see if this company is good, the news that's coming out, the press releases, FDA approvals, all that kind of stuff. You want to see long-term growth in this stock, and that's why someone would choose to be a long-term investor. Overall, long-term investors look for growth in a stock in the long term. Investors are not looking at penny stocks or small cap stocks or anything like that, because penny stocks and small cap stocks, they're penny stocks for a reason. People just like to trade the volatility off those. A lot of beginners think they're going to come in and do a lot of fundamental research and find the next Apple or the next Amazon. But I promise you, you are not going to find the next Apple or Amazon. 90% of these penny stocks eventually go bankrupt. I promise you're not going to find the next Elon Musk or Jeff Bezos in there. As a long-term investor, like I said, you're looking to hold for the long term. So you're really looking to hold for at least longer than a year. Long-term investing is going to be a little bit subjective. Some people will consider long-term 1 year, 3 years, 5 years, 7 years, 10 years. It doesn't really matter, but just know when you're doing a long-term investment, you're looking for overall long-term growth into the next upcoming years. If you're not really trying to learn technical analysis like that, learning about the volume, just all of that kind of stuff, long-term investing is definitely going to be the route you want to take in the market. But I will say, I'm tired of these computers calling me. I'm looking out for one call that I need to answer, so I have to answer all of these unknown numbers. And 9 times out of 10, and 9 times out of 10 they have 9 times out of the 10 and 9 times out of 10 they have a local number. So now I'm picking up because they're out here getting smart and using local numbers to call you, so you think it's someone you might know. Long-term investing is going to be less aggressive. It's not going to require heavy technical analysis. I know some long-term investors like to look into index funds, and they can be a little safer. Not always the case, because if you were to start investing into the SPY or anything like that, and when did the market crash again? March time? Or yeah, somewhere around there, whenever the market crashed. So whoever So whoever started investing at the top, that's a bummer. But a lot of people love to just preach that long-term investing is the way to go, or index funds are so safe, and that's not always the case, and that will never always be the case. But it is less risk, it's less tedious when it comes down to learning. You don't have to put in as much time, but you will still have to put in the time to research the companies, but you won't need as much experience to really get into long-term investing or practice. Now, on the other hand, with day trading and swing trading, these forms of trading are a lot more aggressive to grow your capital. So these are really aggressive investing styles. I will tell you right now, don't expect to be some expert swing trader or some expert day trader just because you see people doing it. It really does take time. It takes a lot of trial and error. And when it comes down to swing trading and day trading, you have a lot of those light bulb moments, but this is where you're gonna have to study technical analysis heavy. And the best way I found for myself to really learn day trading and swing trading to get to the level of understanding that I'm at is literally just being in the market every day. And even when the market's closed, I'm looking at some charts, looking at some previous movers, understanding specific moves for it, understanding volume analysis, understanding the flow, understanding the cap of the stock, understanding the catalyst, why did it move. And then also I like to use Excel sheets to track certain things. So then when I'm tracking and I have a huge sample size, I can find correlations within the stats that I'm tracking. I don't recommend holding penny stocks overnight unless you actually understand what's going on, because most of the time a lot of beginners kind of bag hold these penny stocks, and 9 times out of 10 they're not going to come back unless you see a certain setup like a multi-day breakout. And if you actually understand what that is, you don't really want to be holding any of these penny stocks overnight. So what I see a lot of people doing with swing trading is they're really swing trading those mid to larger cap, mega cap stocks. The moves when it comes down to swing trading will be a little slower, but that will just help your decision making, and it is all relative depending on the capital that you're using in each one. But swing trading will be a lot slower. This is a Discord with a little over 12,400 members, I believe, and right here is the first video of the crash course series. In here we'll post some watch lists, some things we're looking at, earnings, things like that, the market dictionary, intro to stocks, all this good stuff. If you're interested, make sure you hit that first link in the description. We talk in the stock day trading during, okay, people are over here playing. All right, well, I'm not watching the chat. People out here putting memes in the chat when I'm not watching. All right, Melon Usk. But if you're interested in this chat and want to grow a relationship with other traders within the community, be sure to hit that first link in the description. We have option traders in here as well. Swing traders, day traders, the general discussion, market news. Hold on, let's just check this out real quick. Okay, shout out to you, Bosley. 223 under the 8%. Okay, I see you. What else we got in here? Okay, I see you. 27%, 42% on that trade. People in here grinding, making moves. Bosley, I see you again in here, my boy. So make sure to look out for these weekly videos. If you got any value out of this video, be sure to hit that thumbs up. Subscribe to the channel, turn on post notifications so you don't miss any of these videos. It's Errol with Passion to Profit, and I'll catch you guys in the next video.